Hi, this is Mac with PriceActionTradingSystem.com, and this is Friday, August the 3rd. I'm going to do something slightly different today. I will show you our chart today, just show you what I saw. This is what I call a spiking channel. Prices spiked up in the early overnight, and then we went in this channel. And this was the channel we had all day until we broke the trend line right here. And then I got two legs up to a new high, and then we've been in a correction ever since. And just measure these two legs. There's leg one, and there's two legs in leg one, but that's okay. And then there's leg two, and you can see it's almost a perfect. And that's exactly, exactly what you would expect to happen with your trend. And now you've got prices correct, and that's one thing that some people get mistaken on, is they think a correction. Usually, a correction will mean a reversal. But a correction can simply be a market that corrects for, and generally you can look for it to correct for, on average, an hour to hour and a half, maybe longer. Or the trend may continue to go in the other way for longer than that. But this correction right here is long enough to be considered a correction, and we could get a new trend that starts from right there. I had one trader ask me today if we had multiple trend lines that we were breaking and starting new trends over and over, but I don't see that. Now, if you started your trend line down here, let's see what you get. You could, but even if you did it right there, you got your break right here, and you got leg one, and then probably leg two, and now it's correct. And so even if you did it that way, you might see the same thing. But this is what I call a spiking channel, and you'll see this. Prices will shoot up, and the trend is just too steep, and then they will kind of level out to a nicer 45-degree angle, just kind of like this one is. And and that's one of the key cues or clues that you could have used to know that we were kind of getting overdone, is because notice how we're not getting to the upper side of the trend channel. We're getting further and further away from that till we finally broke it. So that's a clue. It doesn't mean that it necessarily happened, because I've seen it do this and then shoot up and touch the trend channel line and then sell off. So, but it's just a clue. So just something to be aware of. But what I want to talk about today, that's all. Well, actually, before I do that, let me just show you where your entries are. Your entries are all the key entry points. There's an entry right here, second entry long. This is basically a breakout pullback long off of that highs across right there. So there was an entry. And when you see, here's another thing, when you see a lot of little small overlapping bars and dojis that just keep going higher and higher, that's a strong trend. It doesn't look like it, but it's a fairly strong trend. So pay attention to it. There was another second entry long right here. This is a double bottom. This is the first break of the trend line. It's a nice double bottom, another nice place to get long. There's a second entry long right there, and this is actually two legs back as well. You can see that little correction right there. Maybe hard to see, but one leg down, pull back, second leg down. And then prices went higher, and this is kind of a breakout pullback long here. Again, it's a couple legs back to the EMA, another second entry long right there. And then of course then you've got two kind of equal legs up to a new high, and then now you got the correction going on. So that's exactly what you would be looking for and would expect today. And it was a fairly easy trading day if you just stayed with the trend and recognized this was a strong trend. Unless you went long right in here, then right in here you should be okay. But that's what I'm going to talk about today: buying low and selling high. What does that really mean, and how do you really control it? Because if you bought up in here, guess what? You bought high, and guess what? You're on a losing trade. But if you bought low anywhere in this trend going up, even if you waited till prices came back to here, you're okay. Here, you're okay. We may bounce back up again here. We may go lower. But you gotta, the key to being a profitable trader is learning how to buy low and sell high. And so that's what I want to talk about today. And what does that really mean? And I'm going to show you what normally happens. Fear and greed get you in this game, and I can see it now. this was actually before the open, but there were probably some traders trading here, and they see this all of a sudden. The news comes out, and they see this big bar spike up, and they've been watching this trending up the whole time, and they keep thinking, should I go long? Should I go short? You know, and then shoot, I should have went long. There it goes again, and pulls back. Should I get long? Should I get short? And the next thing you know, it rockets up again. They're thinking, shoot, I missed another one. Next time, I'm going to get it. And so it pulls back again, and it rockets up, and it gets up, and they say, if it breaks above this bar, I'm going long. And guess what? They get long right in here. And they get a couple ticks in their favor for a split second, and the next thing you know, it's correcting. It looks like it's about to go short, and all of a sudden, when they see this big bar going down, they say, heck, I'm on the wrong side, and they probably reverse, and then they're short. And guess what? As soon as they get short right in here, prices rocket straight back up and go right where they thought they were going to go the first time. And so they lose a couple of points on this trade, and then they're short, and they lose a couple of more, and they've lost 4 to 5, 6 points. And prices, if they'd just stayed with their original trade, prices would be, they'd be up a couple of points instead of down 3 to 4 or 5 points. And it happens over and over. And so you got to learn. Every time you buy up here, look at it's pulling back, and see, and so then they decide, hey, I'm going to buy again, and they buy. Next thing they go, shoot, heck, it's going against me again. And what you have to do is learn to forget these big moves up. You got to get in down here before it moves up. So that's what buying low means. It means buy in here on the correction and be prepared to ride that swing high. And then see, the smart traders are all exiting up here. They got in down here, and now they're taking profits. And so then they got in here, and it starts moving higher, and when it comes back up here, they start taking profits. And you know, so it just keeps going higher. And so you got to sell up at the highs, and you got to buy at the lows. But how do you do that? It's so hard to do. Well, there's key entry points, and you noticed every time that prices rock, look here, here's where I'm going to mark where prices rocket higher. They rocketed higher there, here, here, and here. So there's your real surges each time. All right. Do you see anything there? Do you notice where prices are surging? They're surging off the EMA or the trend line. Look, or both. Every single time, that's where they're surging. So the key entry points when the market is trending are pullbacks to the EMA and the trend line. And I know if you've listened or watched any of my videos, you had to have heard me say that 1,000 times, because I say it almost every time. The key entry points are the only places you're looking to enter. You're not looking to enter in the middle of all this stuff up high up here. You're not looking to, even once this is going up through here, even though it kept going higher, you're not looking to enter in here because you never know when the one you enter is going to be the exact one that pulls back, and then you finally get the nerve to go long right here, and then guess what? It's pulling back. The place to enter is the key entry point. So to be a profitable trader, you have to have discipline. You can't be trading on fear and greed. Greed makes you enter when prices are rocketing up, and fear makes you scared to enter when prices are down here because you think it's going lower. So it's fear and greed that you're fighting consistently. And greed makes you buy high, and fear makes you not buy low, or vice versa, if the market were trending the other way. So if you just, every time it surges up, just sit patient and wait for the right setup. And if you notice here, it's usually a double bottom. You got a double bottom here. This is just kind of a trading range. But notice how the stems are all down here, and then the closes are getting higher. And then finally we get a touch of the EMA, and then boom, there it goes. And notice here, it kind of shot higher, but it never got to the EMA. But finally it got to the EMA, and guess what? It hit the trend line too. And then that's when, boom, you got your real, because all your smart traders are sitting. You know, what I would be doing when prices were in here is I'm eyeballing this trend line and this EMA. And so I'm thinking, especially when we pulled up here and prices started coming back. I'm thinking, all right, I'm going to be looking right here for an entry. And so I just sit patiently and wait till prices get there. Excuse me, I had a little interruption there, so I can't remember where we were, but I know what we were talking about were the key entry points. And again, what I'm doing is I'm eyeballing these places ahead of time, and I'm thinking if it comes back to here, I'm buying, okay, let's say when prices are up here, I'm thinking, okay, if prices pull up here, they're probably going to find some resistance up here, maybe all the way up here, but it could be right here because we have never touched the EMA. We hadn't touched the trend line since we hadn't touched the EMA since way back here. Hadn't touched the trend line since way back here. So we're getting overdue. And then suddenly prices pull back and they touch the EMA. But look, there's no setup. They're all red bars. They're all closing on their lows or their dojis. That's not what we're looking for. We're waiting for a little tiny doji like this. And if it's got a green body, it's even better. So when you get two in a row right there off the trend line, right there on a breakout pullback retest, that's the great place to go on, right above that bar. And guess what? Prices tick up there, and look what happens. Surges off. And the reason it surges off is because this is where all the smart traders are looking to enter. And then this is a breakout pullback long on a day like today. It's probably worth taking. Me, though, I'm going to be in down here, and I'm probably going to wait and enter again when we get back to the EMA or the trend line. And see, here's a trend line we pulled back, but guess what? Prices hit the EMA, hit the trend line. We had a nice little bar right there, but look, prices never broke above it. And so that's not a good sign. So as long as you're following the rules of entering above your signal bar, you never even had a trigger there. But now when you notice you got one leg, a little correction, the second leg, so now there you got a bar, but again, it never triggered. Then you got a red bar. So you could have gone long above that red bar because now you got a little trap here. There's a tick lower, a higher bar, and a tick lower. So you could go long above that red bar now, but even if you waited till here, look, then there's your next surge. And so hopefully that makes sense. You have to buy low and you have to sell high, and that's how you do it. You wait on the key entry points. You wait for pullbacks, and how do you know it's going to bounce here? You don't know. It's a calculated risk. And but most of the time you're like here. See, if I would have been thinking long right here and had my order right there, but guess what? It didn't trigger. It didn't trigger till it got down here. But still, that's the first break of the trend line. It's a double bottom. It's a retest, so that's another key entry point right there. So that's the net. When it didn't trigger here, I'm definitely thinking I bet it triggers right here, and I'm gonna be ready for it if it does. But so what? If it goes lower, then I'm waiting until it probably comes down to this area. Either that or I'm going to notice that we're making lower highs and lower lows again, and then I'm going to be looking for the trigger points on the other side, going to the short side. So hopefully that's clear and that makes sense to you, and I really didn't mean to. But what happens to most traders is they're starting, let's say we just start right here, they're continually looking for an entry, constantly. They're not finding the trend and finding the key entry points and waiting on prices to come to them to the key points. That's the difference between a trader that's just looking for a trade and slinging trades all in here and getting whipsawed versus a trader that's stealthy and is smart and is entering where all the smart traders, the strong hands, are all entering. I'm telling you, listen to me, the strong hands are all entering at the EMA and the trend line, or both. When you get them both, like right there, it's even better. I'm surprised we didn't go higher right there, but this thing was waning. It was starting to lose resistance, and we were probably getting closer to another high. Across, yeah, you see we had all this resistance across here. So that's an obvious reason why we had issues right there, because there's a lot of buy orders sitting there. Smart traders that are trading the daily charts. There's probably a lot of daily orders right in there. So we hit a bunch of orders right there, and it took a while to work through it. And as we work through it and see now, and remember what I was talking about earlier, there's your break of the trend line. There's the first leg up, pull back, second leg up, and now look, we made a big two-or leg of correction. That's perfect price action. It don't get any better than that. And but again, the thing I'm trying to get across to you today is you got to buy low on the corrections if it's trending. Now, if you had a range day, let's go back and find, we've had a bunch of them lately. When you've got a range day like this, let's put our lines on here. When you got a range like this, your trades, you're trying to buy down in here, and you know it dropped a little bit, as this was the overnight low, and then it dropped a little bit into here. So now every time prices come down here, you got to be thinking about buying. And look what happened. Every time prices got down here again, and then look up here. Here were your highs right across there. Get most touches right across there, and you would have been using these highs because there they are, and the last highs were here, and look what happened when we got back. I mean, there were your previous highs. You had a high here, and look what happened when you got back there. Sell off. Look what happened when you got back there. Sold off. And then it comes down here. So you're looking to buy down here. This on a range day, your key entry points are the strong support. You're not looking to get in all along in here. Sure, there's entries in there, and there's trades at work. But if you want to get the high probability trades, you're looking to buy down here, and you're looking to sell up here. And you can see what happened the next day when prices got up here. They went a little bit higher, but this is in the overnight, and that tends to happen. And then they sold off. And then we got down here, and we got this strong support down here. And again, we tried to get below it even in here, but there it went again. And we're still trending higher today. You know, again, this is what I call a spiking channel. Prices spiked up right here in the overnight. But that's too steep. You know, trends don't last very long that are that steep. So a good healthy trend is about 45-degree angle, just like this. And we trended up all day. There's your trend line. We broke it right here. We made two legs up. Each of those legs has two legs within it. And the market moves in twos, so remember that. And that's why we were looking for second entries. And somebody asked me about second entries, so I'm just going to show one real quick. In an uptrend, every time we make a new high, we start counting on the pullback. And so prices start pulling back. There's your first entry. Pulls back again. There's the second time it goes higher, so it's a second entry long. And look, that was a great move. All right, here's another one. This one is harder to see. If you went to a smaller chart, you'd see it. But there's your first pullback, your move up, and your second leg back. And then look, second entry long, boom, it goes higher. And if you come back through here, you'll see that quite often. First leg back, your first move up, then it wasn't much of a correction, but there's your second one, and then there's your second entry long. And look, it was the one that shot up. So all you're really looking for is to make this easy is a two-legged correction. That's what second entries are. It's because the market moves in twos. It's critical you remember that. So you got your new high, then you got one leg down, pull back, second leg. So after your second leg's over, and this is when you don't see equal legs, is because the trend is too strong. So the second leg usually creates a trap, and then the market reverses. Same thing here. Now this was two measured legs right here. Let's just measure and see how close it was. There's leg one, and your little pull up, move up, and then there's leg two. That's a perfect measured move. So you got a perfect measured move there, and it broke the trend line. So anyway, my battery's beeping at me, telling me I'm about to lose. I'm losing battery on my microphone. So I'm going to wrap it up. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.